This video has slightly alternative wealth building strategies. So if you're interested in hearing something besides the same old invest long term for decades in stocks and bonds, and or plan on cutting your expenses and living off of Social Security and retirement withdrawals, if you're interested in something a little bit different, then stay tuned to this video. Hi, I'm Camille Gaines here, and on my website, retirecertain.com, I share what I've learned from investing for about 40 years now, but also, probably more importantly, from creating alternative income streams over the past 15 years or so, along with my husband Larry, after we sort of stumbled into early retirement. In this video, I'm going to share with you some strategies and techniques that we use to help us figure out how we could live without making retirement withdrawals so early, without having to live in a place we didn't want to live for further employment, another decade of employment while we were trying to save more money before official retirement. And just slightly alternative things that work so that we could plan on using these strategies rather than making retirement withdrawals later in life. So the first strategy I want to share is to consider investing in tactical investments instead of just strategic investments. What I mean by that is strategic investing is what everyone does. It's sort of the asset allocation template, if you will, where an investor puts 70% of their money in stocks, for example, and 30% of their money in bonds, for example. That's called strategic investing, and that's what everyone does. You've heard of the asset allocation, and it's based on the percentages you put in each asset are based on your age and your desired risk profile. While it's made to sound kind of complex, it's really very, very simple and basic. All right, then the other type of investing is tactical investing. Tactical investing doesn't just say we're going to put 60% of our money into stocks and 30% in bonds. Instead, what we're going to do is we're going to buy investments based on certain criteria. Maybe they are undervalued, so they're more likely to increase in value. Or maybe they have a certain type of technical indicator. Ooh, that sounds kind of, complex, I know, but I'll go into more detail about that. That would lead us to invest in this. So tactical investing is based on changing environments. We live in changing environments, changing financial environments, changing economies, changing financial markets. And it's saying, I'm going to take advantage of this opportunity that has presented itself. A perfect example is the movie The Big Short, where the star of the movie took advantage of the upcoming financial crisis because he saw the crazy lending that was going on. That was very tactical of him. He saw an opportunity that he took advantage of. More proactive investors are tactical investors. Warren Buffett is a tactical investor. He sees that there's an opportunity in a stock or in taking a large position in a company and becoming involved in the management of it. Other types of tactical investments that I mentioned are more technical in nature. So technical in nature, by that I mean we can use charts. So stock charts are used to show various things that happen with price movements of assets. And based on how those movements, what they've done in the past, they're more likely to happen again, showing us that based on this asset class is likely to rise again. One such very popular type of indicator is a momentum-based indicator. So there are all kinds of different criteria that can be used to be tactical in nature, but it's different from simply just saying, I'm going to put 70% of my money in stocks and 30% in bonds, regardless of what happens. It says I'm going to take advantage of opportunities that I find from any of these various methods, whether it's valuations or from looking at stock charts or following someone else's strategy that they've developed. It's more tactical in nature. So that's something to consider as we move forward, as we get older, as we become more advanced and sophisticated in our investing strategies. The next strategy is to generate more than one income stream from the same capital. I love this one, and I write about it in my Ultimate Rise Wealth Plan. I'll put a link in the description below this video if you want to check that out. But I call these double wealth builders, and that's because we can use the same capital to generate income from more than one source. So a perfect example of this might be cover call writing on dividend stocks. So say that you own some dividend stocks and they're paying you that little dividend that you get, and then you also sell call options every month or every 6 weeks or even every week, whatever it is you choose. I have another video on that. And that generates income from selling those call options. So you're getting two income streams, but it's from the same capital. So there's no more capital at risk, yet you've been able to create these multiple double income streams in this example. Real estate rentals are another example of creating more than one income stream from a property. For example, we own a property that has 4 doors on it. It's 2 duplexes. So from that one effort and from that one down payment that we used actually to purchase this property, we're able to generate 4 times the income. Now, granted, we did pay more for this property because it was 4 doors, but it's certainly much less capital as well as much less attention and management than if we had gone around and bought 4 separate properties. So it's figuring out how you can generate more than one income stream off the same capital without increasing risk because you've just used that capital one time. Another great example of this that's become so popular now is online business. It's not just online business. I guess any business does this. A local business could do this as well. A brick and mortar business might sell hamburgers and French fries, right? So those are 2 different things that they sell. But online businesses require very, very little capital, and owners are able to set up multiple income streams from all different kinds of resources. We've done that with a couple of our businesses, and there's so many different ways that you can generate income on, again, that same amount of capital, in this case, with a very small amount of capital, which I'm going to talk about more next. The next strategy is to use both high capital assets or investments as well as low capital investments. So what I mean by this is stocks, for example, bonds, for example, they take a lot of our capital. We can only go so far with them. And the thing is, this is what almost everybody invests in because they think this is the only option for them. This is all we hear about. This is what we're taught we need to do. We need to do what everybody else is doing and just buy stocks and bonds following an asset allocation template, and perhaps even with a financial advisor or in our 401k or whatever it is. But there's so many other investments that we can do, and some of those other investments require much less capital than stocks and bonds. For example, I've touched on real estate. Real estate can be purchased with a down payment. It gives us leverage. We don't have to use all of our capital in order to purchase real estate. Small businesses, another great example. Small businesses can be started with 0 capital. We literally have started small businesses with less than $500 capital and that have gone on to make that money back many times over. In fact, one of our small businesses that we did put a couple thousand into getting the website built and everything, but all in, we've lived off of for many years now. So small businesses that are online require very, very little capital, yet they can be wonderful opportunities. Not only that, they're a great market to test. They're a great idea to test, because if they don't work out, you just close it up, shut down the website or whatever, take what you learned and try it again. This is what entrepreneurs do. They keep going until they've succeeded. So think of not only stocks and bonds, but think of other things that you can do that are low capital investments that will completely change your financial situation. The next strategy is to be the leader of your wealth. Be the CEO of your wealth, or CFO. We call me the CFO of our investments. You can be that too, even if you use a financial advisor. What does this take? It takes defining what it is you really, really want in your life. It takes looking at assets outside of just stocks and bonds. It takes incorporating your skills into your investments to create wealth. Perhaps you're really good at analysis, so it would make sense for you to choose your own investments. Perhaps pick stocks or sell covered calls, or maybe even use some option strategies. Or you could use those analysis skills in real estate. Perhaps you're really good at remodeling, in which case it could make a lot of sense for you to buy undervalued properties, fix them up, and flip them for short-term capital gains. No matter what your skills are, you can use them in a way that will help you create wealth. Maybe you're a good writer, so you decide to start an online content-based website. Whatever it is, you're being the leader of your wealth beyond just stocks and bonds. When we hire a financial advisor, I think we tend to and been there and done that, we tend to go, whew, boy, that's off my plate, and now I don't really have to pay attention to my investments because I've got this person or these couple of different advisors or wealth managers taking care of it. And that's simply not the case. We still need to be the leaders of our wealth. Why? Well, guess what? If something happens and that advisor that we chose doesn't do a good job and we lose our money, then we're the ones that will suffer, not the person that we hired to manage our investments. So we still need to act as CEO of our wealth. And when we hire a financial advisor, I know from personal speaking, from working with clients, that often a financial advisor is recommended by a friend and they're hired for not the right reasons, simply because they were recommended by a friend and they know they can trust them. But there are other reasons to hire a financial advisor, and that's so you can get the results that you want and live the life that you want. That's based on you really, really understanding the investments that they're choosing and what all your different options are. And not only that, but then as the CEO of our wealth, we need to hire the right person, but also monitor them and evaluate them and make sure we want to keep them. So this strategy is about, regardless of whether or not you have your money managed by someone else, perhaps it's someone that manages your 401k plan that you feel like is, it's over there. It's not something you can or have to take care of. But that simply isn't the case. There are a lot of choices even with a 401k. So this is really just about being the CEO or CFO of your wealth and managing your money and being the leader of your wealth. And then the next strategy is simply strategizing and leveraging your time, your skills, and your assets that you already own and your money. It's from looking at all of that from a very big picture, yet strategically, and saying, is this the best place for my capital, for example? So for example, we have a home and we also have real estate. Having bought the home a long time ago, we have a lot of equity in it. We also have a lot of equity in our real estate now since we've owned it for a long time. So I've had to strategically look at this and say, does this make sense for us to have this much money tied up in real estate after having real estate increased in value so much like it has? So be strategic with your time, your capital, your assets, and make them all work for you. Use your skills, as I touched on earlier, to create wealth for you, but do it from a place of a big picture, not just here's my stock and bond investments, here's my 401k, here's my retirement withdrawals and my Social Security. It's so much bigger than that. And as we get older, I think that we tend to be stuck maybe a little bit more in the way things were done throughout our lives, whereas the younger people, as I call them, are really taking advantage of all the many opportunities now to create wealth. And I think we have to look with younger eyes and with younger minds to see what we can do, because what has worked in the past few decades may not work going forward. And as older investors, we need to maybe do something a little bit different and a little bit broader than just investing in stocks and bonds, because that may not be the answer going forward. Remember, retire certain.